Hello everyone, welcome back to my channel Stock with Khan, and in today's video I'm gonna be talking about what fundamentals do I follow in order to choose a company to invest in. Charlie Munger was the one saying that you need to be correct about only one company to become rich or become wealthy. So all you need to know is to understand the fundamentals of a company, and if the fundamentals are not matching with what the gurus, so to say, of the stock market are referring to, then you should not choose that company. So if you want to invest in a growth company, for instance, I would give you an example of an Apple. So let's go to Apple and see what I mean by the fundamentals and how I choose a company for investing. So stick around. After the break, I will in detail explain this to you. So welcome back. Just like I mentioned, I'm going to talk about the fundamentals of a company so that you choose the right company for investment. Here is the example of Apple. You can see Apple right now is trading at 124 and its market cap is 2 trillion. So its profile is speaking for itself. Company, the bigger the market cap, the more stable and the more solid the company is, the less volatility you will see in that stock, unless there is a crash, like for instance in February 2020 or early March 2020, when the whole market because of pandemic went down. You will see here, for example, in early March you can see that Apple price was, let's go into 5 years chart and then I can show this to you. So you see this is in February, in early March, here in 2020, yeah, early March, you can see the stock was around 63. So it went down from almost 80 to 60, and then it popped back, and right now it has doubled since then, literally. So what I mean is companies like that, so that happened to Apple. Other companies went down massively, but company like that, which has very strong fundamentals indicated by the market cap, are not shaken so dramatically. Just like you can see that Apple price came from 80 to 77 to 60. That to other companies would have been, if the company was not having such strong fundamentals, that effect would have been massive. That is one thing. The other thing you need to consider, and that is very important, is the PE ratio. Anytime a PE is I personally choose PE under 20, but anytime you can say the PE ratio is under 30, you can trust that company, and you can consider that company and have the belief that there will not be so much of volatility in the stock. And on the longer run, if the company has a lot of, so to say, cash in hand and is it's already a profitable company. Its EPS, for instance, like here with Apple, is in positive. Apple is making earning per share is 4.45. That is massive for a company. Even Tesla is in minus. I wouldn't say minus. It became profitable in 2020. It's 0.99 something. So the PE should be under 30 minimum. EPS should be always in positive. Market cap, the bigger the better. Of course, the bigger the less volatility. You should also consider that. Let's go into some more statistics on that. Here you can also see that the company should fundamentally, whenever a company is paying dividend, it's a reliable company. It's not so much growth oriented. You cannot expect so much from the stocks increase in value, but you will always be consistently getting the dividend either quarterly or annually. This is a case scenario with Apple, but I personally think, especially with the way Apple is talking about iCar, going towards the cars being electrified and being somehow working together with Tesla, I think this could potentially, if that happen, will have an effect, major effect on the stock price of Apple. So the dividend, whenever a company is paying dividend, it also speaks for the solidarity of the company. The other thing I want to talk about is the PEG ratio. It should always be under 2. You can see that for Apple is 1.45. PEG ratio for a company should always be under 2 if you want to trust the company. Anytime PEG ratio is above that, I would not trust the company in such a sense that I can invest for 10 years in that company. Because the other thing is, if you see, for example, potential in a company like ChargePoint, the electric vehicle charge station company, this company has such massive potential in the future. We know that the future is for EVs and the charge station are going to be needed. So this company is not profitable yet, and it will take, for example, somewhere between 3 to 5 years for it to become profit. But I'm highly bullish on it because I know what the future is gonna be like for the company like that. So if you see the potential in the company in the long run, then it's okay. But otherwise, I would look at the fundamentals deeply, and only then I'm gonna be selecting the company. So these were some of the points that I wanted to talk about. And the other thing is the 52-week high, 52-week low. This range should not be so dramatic, because anytime the range is massive, tells you how massively the stock can go high. Similarly, it can also go low, so the volatility is massive. Then this you generally see with penny stocks. So that was just a small description, because someone asked me, how do you choose a stock and how do you select the company's fundamentals? So these are a few of the things I want to talk about. There are other things I also consider, like gross margin and stuff like that, but I didn't talk about this in detail. Maybe some other video I will cover that. The other thing I want to talk about is this was also someone asked me, how exactly do you invest in crypto and what is the ratio of your portfolio that is covered by crypto? So I personally, just like the gurus from Wall Street, including Katie Wood, they have a certain criteria. I personally go for 10 to 15% of my investment is I personally believe either with crypto directly or with crypto mining companies. I try to invest in those, for example, Mara, Rayat, or Canaan. And the investment directly in Bitcoin, for instance, or Ethereum, so far I have not done. I wanted to invest in Ethereum. I was lucky enough I didn't invest because Ethereum had a massive drop together with, alongside with Bitcoin and Dogecoin. But if I would be in the audience that you are right now, and if you are new for investment in crypto, I would highly recommend that if you can afford, if you have some extra money, only then invest in crypto. In the beginning, I will only invest in stocks, in growth stocks, for example, and only if I can spare some money and if I am sure that if I lose that money, I'm still gonna be fine, only then I will go to crypto. And then you can also even increase from 10 to 15%. You can extend that up to 30%, so to say. But only play with crypto when you can afford to lose that money. So my general advice is, if you are good with money, only then invest in crypto, and on the loose end reach to 30% on the so to say, following the advice of the gurus from the Wall Street, invest 10 to 15% of your money in crypto. The other question from someone was that what are the main websites that I choose to invest in crypto? So I want to speak about a few of the websites that I personally think they are really good. Number one is eToro, very, very popular in Germany, here in Europe. The second one, which came very recently, Coinbase. I think Coinbase is going to be one giant company. This is really, really good as well. Alongside that is American Binance. It's also very, very good. Then there is Coinama or Coinmama. I've heard about it, and someone mentioned that it's also quite good. So these are some of the companies that I have heard about. I'm personally also using plus 500. But the most important one is, and I personally think is going to be a giant in the future, is Coinbase. So these are a few names that I mentioned: Coinbase, Binance, eToro, plus 500, and CoinMama or CoinNama. You have to check on that one. I have heard from someone that is also quite good. So I hope you found this video of value. If you did, do me a favor, hit that subscribe button as well as the notification bell, and I will see you in the next video.